Hi, this is Rico from realdeepvalueinvesting.com. In this quick video, I'm going to talk about the third stock I sold, namely Barnwell Industries. This stock belongs to the deep value category based on a negative enterprise value strategy. Barnwell Industries is listed on the New York Stock Exchange with ticker symbol BRN. First, I give you a bit of information about the company. Thereafter, I'll discuss the company's fundamentals, and last but not least, I'm going to share my investment returns with you. Before moving further, I have to stress that this video and related material is in no way a buy or sell recommendation. It expresses my own experience with the stock and strategy. You should always do your own research and due diligence before buying or selling a stock. Having that said, let's see what kind of company Barnwell Industries is. Barnwell Industries operates in the oil and gas, land investment and contract drilling segments. It engages in oil and natural gas development, production, acquisition and sales in Alberta, Canada, and invests in land interest in Hawaii. Furthermore, Barnwell provides well drilling services and water pumping system installation and repairs in Hawaii. The company fundamentals are very important in deciding whether or not to buy. I bought the stock based on the financial data provided in the 10Q of March 2017. What immediately catches the eye is the huge cash pile of $16.5 million. The company has no debt and a small non-controlling interest of $400K. The market capitalization comes in at $15.5 million. Adding these figures up and you get a gross enterprise value of $15.9 million. Subtracting the $16.5 million cash pile from the enterprise value, and you see that Barnwell was a negative enterprise value stock at the time. Besides being a negative enterprise value company, Barnwell has a rock-solid balance sheet with a current ratio of 4.6. And with a sales to asset ratio of 41%, it's clear that Barnwell is alive and kicking with actual operations. Further, studies show that small cap stocks outperform stocks with a higher market capitalization, and with a market capitalization of just $15.5 million, Barnwell can definitely be classified as a small cap stock. When I sold the company in August 2018, Barnwell wasn't a negative enterprise value stock anymore. Looking at the June 2018 figures, the cash pile decreased with $3 million, and as a result of a higher share price, the market capitalization increased with $900,000. Subtracting the $13.5 million cash pile from the $17 million gross enterprise value leaves us with an enterprise value of $3.4 million. This is not negative anymore, so it was time to sell the stock and look for a new opportunity. Let's turn to the investment return. At first, I estimated the fair value of the company between $5 and $3.21, based on the price to sales ratio and EBITDA multiple. This brings home an expected return between 172% and 74%. So, let's look what actually happened. At first, the price dropped a bit, as usual, but then started to climb to around $2.67, resulting in an unrealized profit of 45%. But after that, it was a roller coaster with a remarkable spike in July 2018, only to drop significantly afterwards to end with a price of $1.94. This again shows the volatile nature of deep value stocks, so be sure you are emotionally prepared for this when you are planning on investing in deep value stocks. Eventually, I ended with a nice profit of 6%, so it's not the return I hope for, but at least it's a profit. I hope I gave you some valuable insights in the buying process and the dynamics of holding a deep value stock. Just leave a reply below in case you have any questions or remarks. See you next time, Rico.